now. Time Technoplast reported a good quarter last week. That stock up around 3.5% today as well. Anil Jain, the CMD of the company, now joins in. Thanks a lot, Mr. Jain, for joining in. First up, 27% growth on the operating profit this time with a 25% revenue growth. What can we expect in FY18, sir?
Well, we will continue the same journey. If you look at my growth in the last 10 years, we have got a CAGR of about 20% or so. I guess we will have the same one going into the next years.
Okay.
In terms of profit, of course, we had a substantial growth in this year. As you know, we have added a few value-add products in the last 2 or 3 years, which are growing very rapidly. In fact, their share of business in our overall business will be increasing in next years, which will help us in giving better EBITDA margins on a broader revenue. So I guess things should really work out even better.
All right. So, Mr. Jain, what you're saying is on the top line, we'll get a 20% growth for FY18. We're right on that, right?
That is what we are looking at here.
Fantastic. You know, so middle of this year, you'll be having that value-added products, the composite cylinders business. You'll have more capacity that will come on stream. So for the second half of this year, what kind of a capacity utilization levels are you looking at for that enhanced 700,000 odd? And in FY19, what can your numbers look like? Because you're having some other capacities as well that will be coming on stream. If you give us a sense of that.
Okay, when we talk about the value-add business, it actually includes my IBCs, also the composite cylinders, and the MOX film that we launched just about a month ago. So these businesses are currently only about, let's say, 13% of our total revenue.
Okay.
But going forward, it will be going up to 19, 22 or so. So they are looking at a growth of about CAGR growth of 40%, my value-add businesses. And my regular business will still grow at about 13%. And as the share of business of the value-add businesses will go up, in my value-add businesses, the EBITDA level is likely to be about, it is right now about 17%, will go to 19, 20, 21, 22%. So therefore, you would find that there will be expansion in our margins going forward.
Right. So
as to 18, 19, I guess if you're looking at 20% growth at 17, 18, though it might be a little challenging to say what we can do, but upward of 17, 18% we surely can expect. But we will target will be 20%. Yeah.
So in that case, what exactly could your margins be then? Because the share of value-added products will increase. You spoke about margins improving. They're around 14% right now. Can we see upwards of around 17, 18% plus?
No, they would not be that. They will not go that far. It will be about, let's say, closer to 15.5 or 16%, because the base for the value-add businesses is still very small as a share of business. So though they may provide me bigger margins, but the overall on a consolidated basis, their EBITDA margins will not. So we are looking at 15.16% in 17-18, and I believe it will be about 15.6 in 18-19. And eventually we are looking at 16.5, 17% in 2021.
All right. You know, Mr. Jain, as you speak, I think the market likes what you're saying and they're really hearing you out because the stock is moving higher as we speak. But so let's probe you more. You're saying that your margins could improve a tad bit. What about your ROC? Now, that has improved steadily. Currently, I think in the last year, you ended up with around 14.7%. Earlier, I remember you telling me that, in fact, it could go up by around 150, 200 basis points. So by the end of this year, are we bracing ourselves for around 16.5% in terms of ROC? Because that's where the re-rating comes for the stock. And what is your debt in your books currently?
Okay, I'll answer both, actually. We had said beginning of last financial year, we had said that our ROC will be improving by about 1.6, 1.7%, which we have achieved this year. We are saying from here onwards up to 2021, our ROC will be increasing by 2% every year. In fact, our internal target in 2021 is about 21, 22% of ROC. So that will certainly be going up. Insofar as our debts are concerned, they are about 750 crores right now. In fact, we have reduced it to 722 on 31st March 2017. But quite honestly, I am looking at the growth opportunities. We have set out an internal target for ourselves that our debts at any point in time will not be more than 2 times of our debt than EBITDA.
Right, Mr. Jain, now, since you have the street's attention, the stock is at the high point of the day. Let me ask you a question from shareholders' perspective. Now, the promoters, they sold about 22% stake in the last quarter. Also, the promoter stake has come down to 52% due to issue of preference shares as well. Are you looking to increase that stake going forward? Can we expect some sort of a buyback or a sweetener coming in from for shareholders going forward?
I mean, quite honestly, I just diluted 2% because for a specific reason. I can buy it back anytime I like, actually. That's not a problem at all.
Are you going to buy it back?
Well, I can't really make that announcement on the TV, but yes, at an appropriate time, we would be looking
But that is
at,
an option in the very near future, right?
we will exercise that option as the situation permits us, because right now the money that we have used up is for a certain purpose. We will be expecting a substantial liquidity coming out of there, and that is the one which will be using it for buying back not only 2%, but if the need be, we will go beyond that as well.
All right, Mr. Jain, you're showing some confidence there. So whenever you do that, you know, your viewers will like to hear what exactly is the trajectory going forward. Thanks so much for joining and giving us all